Good morning for September 1st. Looking at the pre-market trading plans for the E-mini S&P 500 today, a Wednesday. And I'm late getting this done. I had a heck of a time downloading data today. I had some problems. Got them worked out finally. And I don't want to say I rushed to put this together. That's why I'm starting late. I tried to get it done, but it's only been in the last 10 minutes. Well, maybe a little more, but boy, that's awful. You know, you wake up and turn everything on and it didn't work like it's supposed to. So, all right. Important thing, just glancing at this profile chart, we got a double-digit gap down. So right now we're at 39.31, and yesterday's low was at 39.53. So over 20-point gap down. Let's look at the daily to start with. We are in a well, I don't think I have the weekly pulled up here. Here's last week's range, which I guess I need to adjust here. The blue lines are my my last week's range. Sorry, I didn't realize that I hadn't fixed that. So you know we are definitively moving lower. Okay, we're one time framing lower on the daily, and where's it going to stop? You know, we hit the 618 retracement mark here yesterday, and where we're trading now, we are definitely within this the terminus of wave 1, which may or may not be it's the violation of the rule technically, but in futures markets there tends to be high extremes, and sometimes this can be allowed. But I would prefer to make this a 1-2 once we open here, so I'll change that later. Could we go into this 1618 extension? Possibly. Where did that come from? I don't even remember, but it doesn't matter whether I remember how it got there or not. I put it there for a reason, and it's still valid because we've not come back down to it. All right, that being said, again, I'm trying to rush through this because we're coming up on the open, and I got to get this uploaded and processed and published and all that. You know, we're getting more downside continuation. There's some fundamentals that suggest the bears are, you know, have some advantages still. And I'm going to get to, let's just take it from the top down and look at the prep here. Okay. Let's see, go all the way up here to the, so the monthly, we're kind of balancing. We're back in the last month or two's trading range. And weekly, we're one time framing down. And in the daily, we're one time framing down. Okay. And we're below all the moving averages, which suggests, you know, the trend is changing to the downside. But these are also out of, well, hang on a minute. Let me look here. Okay, the market's trading lower than all these, but they're sort of out of order. I think I need to put something like that on my sheet to make sense of that. Okay, I'm not going to go through all the market structure here. We still have potential for short covering rally above the recent highs. It remains intact. And we also have an island reversal on the low. I don't know. Maybe I need to revisit the whole definition of an island reversal. You know what? Maybe we don't anymore. See, we had a gap down here and a gap up here. I guess we kind of closed that, so I guess that I can take that off the sheet. Forgot to do that. I'll just take that out right now. Okay, moving on. I need to update those market structure things, but I have another place that I'm putting them. So yesterday we traded lower after a kind of a little bit push up, kind of maybe a fake out. One of the things that I'm going to mention is that we did not take out yesterday's overnight high. I believe yesterday's high is a weak high, okay? Meaning we're likely to come back through there in the near future. We attempted direction was lower, successful, yes. Normal variation day. We had range extension to the downside, no range extension to the upside, and the value was overlapping to lower. Okay. Right now, again, we've got a 20-point gap down, 100% short, net short inventory. Let's see here. This is the news. We've already passed the jobless claims. We got ISM PMI coming up at 10, so that's something to watch for any big move. There's also natural gas if you're an oil trader, or excuse me, a natural gas trader. All right, so let's get into the good stuff here. Okay. All right. First story. I guess I could come up with 5, but let's just leave it for 4 for now. we gap down 10 plus points. We're gapping down 20 points. Gap rules. Basically, you could take an opening range trade. You could take tape reversals off of some inflection points. Maybe this ledge here. Maybe the value area high. Maybe the VPOC. Maybe this VWAP in the overnight. That's the green line. You work it out. Okay. So there's an opportunity to maybe look for reversals against some of those areas. And what we're going to want in the conditions, strongly negative market internals. We want to build value down here or keep value below the low of yesterday and not really close the gap early. And the next story would be we close the gap from this big gap down. And again, strategy is because we got a big gap down, there's a lot of room to take a chunk out of it. And I use the prairie dog, meaning we might, one scenario is we might come down to this poor low in the overnight. So we have a poor low in the overnight and a weak high yesterday. We also have a poor high in the overnight from the day before. And I'm pointing that out. That's conflicting information. I don't think the structure above is very good or the structure below is very good. We'll see what happens. But I want to say that prairie dog would be that we come out, we shoot down here somehow, and we take out the overnight low, come back into the range. We look down here and look back in, and then it begins to move higher. That could happen in ABC period. I would think if that we're still down here in the ABCD period, that the potential for continuation of the downside is far greater. All right, but remember, and this is a real key thing in the ES especially. Oftentimes in the first hour to 2 hours of trade, you have one directional move and then a reversal to a different direction, sort of getting everybody going one way and then flipping the script on them. Okay. So we don't want market internals in this case to support continuation early, meaning they'll be mixed or they won't be heavily strong to the negative side. We want the tempo, again, as I was saying yesterday, not every one of these conditions has to occur. One can occur or several can occur. This is where experience and just screen time comes into play. But the more you have, the better the odds. All right, tempo relatively slow. Because we had the news at 8:30 of jobless claims, we might have a lot of it might be a high tempo. It might be a lot of flitting around. So maybe this won't really affect it. But we're just looking for signs that we're going to get continuation, and we want positive market internals if we're buying. We like to see them more than just mixed. We'd like to see them start to be rolling up past the I want to see the tick above zero. I want to see the breadth above zero, and all that. And it'd be great if we have a high confidence open to the upside. All right. The next thing is, this is the first order of business. One of these, we're going to keep going down or we're going to close the gap. Of course, we could trade in the overnight range. Could just spend a bunch of time with the short initial balance. I don't know. I didn't put that in here, but let's just talk. Are we going to enter the prior day range? So we get to the close of the gap, and then the strategy would be to get long inside of there to trade to the other side of the range. There's different kinds of entries you could use, go along against yesterday's low or yesterday's value area low, and so on and so forth. But once we get in there, it's very important that we build value. And even if we built value lower, if we get a double distribution up in there later, and then we have market internals supporting that direction, then the next thing, and again, this is one piece at a time. I think these are linked, story 2, 3, and 4, okay? Closing the gap, re-entering the prior day's range, and taking out yesterday's high with continuation. So we need to take these as different situations, even though we might be moving towards ultimately this. I am not going to sit here with the one lot and hold on to it forever till the end of the day expecting this to happen, is what I'm saying. And if that's your style, or if you want to put on a trade and run it, great, good for you. I'm not there yet, okay? So if we take out the prior high of day with continuation, we want to get on board with short covering because there's a lot of room for short covering in the last couple of days and overnights. We're looking for one-time framing entries, reversions, use your favorite time frame and moving averages or whatever. And then breakouts, if you see that opportunity, if you know how to trade breakouts. We're looking for positive market internals at buying, and we're looking for a high confidence open, or, right, the market personality shifts after failing to see continuation in the first third or first half of the session. This is very important. So be aware of market personality shifts. We can't just gauge the whole day many times on just what happens in the first hour or so. Let's see. Okay, again, we got a poor low in the overnight session, and in the prior overnight session, we have a poor high. Oh, I need to add that in, and a weak high on the prior day. Okay, so there's your insight into my plan for today and what happens, and I hope it's helpful to you, and we'll see you later and maybe go over what happened. All right, make a great day.